Good afternoon, folks. Andrew Schartenberg here, your mortgage engineer. Today is Tuesday, January 25th. I'm here with your rate report and home buyer tip of the day. Today we've seen mortgage interest rates decrease just ever so slightly. We're seeing 4.875% on conventional Fannie Mae and Freddie Mac 30-year fixed loans with 0 points, perfect scenarios. And on FHA and VA government loans, we're seeing rates of about 4.625% for, again, the perfect scenario on a 30-year fixed 0-point loan. Why are rates so low today? Well, it's actually kind of counterintuitive. The only piece of economic data that was released today was the Conference Board's Consumer Confidence Index, which actually showed a much stronger than expected reading, which typically would signal a sell-off in the bond market and we'd see mortgage rates spike. But the opposite has occurred. The stock markets are down, the bond markets are doing a little bit better. In fact, the yield on the 10-year Treasury note, which is a benchmark that we measure mortgage-backed securities against, is down from about 3.40% yesterday to about 3.32%, leading for that slight decrease in mortgage rates. Why is that? Well, there were some weaker than expected home price reports that came out today, and also I think that the Consumer Confidence Index is still below a reading of 60. In the last 17 years, there have only been 2 times when the Consumer Confidence Index has dipped below 63. So even though it spiked up today from a reading of 53 last month to 60 today, it's still well below the 63 that is kind of a benchmark for that. Now, that's not something that's widely known. It's just if you look at bond technical analysis and stuff like that, I think that we're still certainly not even close to out of the woods. So that's where rates are today. Your home buyer tip of the day. Getting creative, and especially in this economy with jobs being where they are, people's savings having dried up and whatnot, you're going to be scratching for down payments for the first-time home buyers out there. But what some people may not know is that you can use your 401k as a source of a down payment. Most 401k plans, and I can't quote everybody's specific plan, so you're going to have to look for the terms and conditions of your own specific plan, but you can either take a loan of about 50% of the value of your 401k at very favorable repayment conditions, and the interest, in fact, on the payment back is you're paying it to yourself. You're not paying it to anybody else. So it's a zero interest loan, essentially. And you can also take up usually about $10,000 as a withdrawal with no penalties for the purchase of a new home. Again, you're going to have to look to the specific terms of your individual 401ks out there, folks, but it is a good source of down payment if you don't have a lot of money saved up. That combined with FHA loans out there, which are offer down payments as low as 3.5%, make it feasible for a lot of you to be able to get into homes that you might not otherwise be able to afford because you haven't been able to save a lot of money up in the bank. Alternatively, if you have saved some money up, you can use that 401k money as the down payment, or you can use it to furnish the house, do whatever you need to do. So that's your tip of the day. We'll be back tomorrow with your rate report and home buyer tip of the day. Stay dry out there. We are in the snowy northeast, and hopefully we're going to get rid of this snow, but tomorrow it looks like we're going to be seeing even more. So hopefully we'll see the rate report tomorrow.